It's important we consider advantages of investing in sector funds. We've had the disadvantages or the pitfalls. We want to consider the advantages this time around. So sector funds offer several advantages for investors looking to concentrate their investment in specific areas of the economy. So if that is your intention, this particular video is so here are some key benefits of investing in sector funds. Number one is targeted exposure. Some funds provides a focused way to invest in a specific sector or industry, allowing investors to capitalize on trends, on growth or economic conditions that are favorable to that specific sector. For example, an investor may choose to invest in a technology fund to gain exposure to the tech industry, or maybe may choose to invest in a healthcare fund to target, the growth of health-related companies. So whichever one you want to choose, you want to benefit from whatever is happening in that specific sector. Number two is potential for high returns. Potential for high returns. By concentrating on a specific sector, sector funds have the potential to outperform broader market funds during periods when the sector is experiencing a strong growth or strong performance. For instance, if a particular industry like renewable energy is doing very well, it's booming, so a sector fund focus on that industry could provide a higher than average return, could provide significant returns. Number three is diversification within the sector. Diversification within the sector. Although sector funds are concentrated in a single sector, they typically invest in a diversified portfolio of stocks within that sector. They invest in many stocks within that particular sectors. And by so doing, that diversification is kind of guaranteed. This diversification reduces the risk, compared to investing in individual stocks within that sector. Number four is opportunity to take advantage of market cycles. Different sectors perform better, at different points in the economic cycle, at different phases of the economic cycle. So sector funds allow investors to take advantage of these market cycles by shifting their investments into sectors that are expected to outperform, based on macroeconomic trends, technological advancements, or consumer behavior, and even market sentiments sometimes. Number five is hedge against specific risk. Hedge against specific risk. Sector funds can be used to hedge against risk associated with certain sectors. For example, an investor who is concerned about impact of inflation on the broader markets may invest in a sector fund focus on commodities which may perform better during inflationary periods. Commodities may perform very well even when the economy facing uh, increase inflation. Number six is exposure to niche markets. Exposure to, is it niche or niche? This American, British, English, some kind of a thing. So exposure to niche markets. Our sector funds offer easy access to niche industries that may be hard to invest in individually. For instance, a fund focusing on emerging markets, on cyber securities or biotechnology, gives investors exposure to kind of specialized field that offer, high growth potential. So you can equally invest in these niche markets when you invest in sector funds that invest in them. Please like this video and subscribe to this channel if you've not done that. Number seven is tactical asset allocation. Investors can use sector funds to implement a kind of tactical strategic asset allocation strategy, adjusting their portfolio based on short-term opportunities arising from specific sectors. And this allows for a more flexible and responsive. It kind of incorporates flexibility and responsiveness to market conditions, compared to purely passive kind of broad-based portfolio. It helps you to be able to respond to whatever is happening in the markets around that sector. Number eight is increased focus on specific sector trend. Increased focus on specific sector trend. Sector funds provide investors with the ability to track and invest in sectors with specific, growth drivers, growth catalysts, or trends. For example, an investor might choose a fund focused on, let's say, electric vehicles, and maybe artificial intelligence or innovation in healthcare. So by so doing, they tend to align their investments with their personal convictions or personal values or personal preferences, or market predictions. Number nine is customization of portfolios. Customization of portfolio. You don't only customize your clothing, you can equally customize your investment portfolio. So investors looking to fine-tune their portfolios can use sector funds to adjust uh, exposure to specific sectors that they believe will outperform, while potentially reducing exposure to sectors they expect to underperform. So you avoid the expected underperforming, a sector expected to underperform, and you concentrate on an industry you expect will outperform in the near future. Number 10 is lower cost for targeted exposure. Sector funds can be more cost effective than directly purchasing individual stocks in the sector. as they provide broad exposure to sectors with a single investments. They can also offer diversification benefits, at a lower cost compared to building a diversified portfolio of individual stocks. You know, of individual stocks. You want to buy individual stocks to guarantee diversification in your portfolio. It will be more expensive compared to you buying a sector fund that will invest in the sector you are interested in. So while sector fund offers these advantages, it's important to recognize that their concentrated nature can also result in high volatility and risk. Very important. So investors should carefully assess their goals and risk tolerance before incorporating sector funds into their investment strategy or into their portfolio.